Dow Jones lost over 1.7%, turning negative for this year.
Fed still has the notion of getting up to a restrictive level and just leaving it there.
Our view that ultimately the Fed will over-tighten. Actually, my personal feeling is that the Fed has already over-tightened.
They have a target of 4,400, which is a big upside to the current market price.
Adani Group has gone ahead and paid over 7,370 crore of share-backed financing.
First take on the index is down almost about 75 odd points. Not a good opening at all for the market.
That inflation is going to prove to be more persistent.
The valuations, whichever way you cut it, at 17.7 to 18.7 times profits remains very, very competitive.
I think what we need is a mindset change with the CEOs. The old boys club needs to be broken, and the biggest champion of that needs to be the man.
On the benchmark indices, the Nifty, Sensex, and even the mid-cap index, we're pretty much flashing red and green.
People in the Reserve Bank appear to be satisfied with Suman Katfalia's performance, and therefore the board's recommendation that he be given a 3-year term should be approved.
Sources do tell CNBC TV18 that Chola may eye an arrangement offering management control of Aptos Value Housing.
We have the Nifty lower by 27 points.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Surbhi Upadhyay in the studio. And as always, we've got Nigel D'Souza in the newsroom. Good afternoon, Surbhi. Good afternoon, Nigel. Steady rise for our markets and not bad. We woke up to negative global cues. The US markets were down 1.5%. The Hang Seng was down more than 2%. The SGX Nifty was suggesting a gap down opening. We had a gap down opening. The Nifty went down to levels of 17,600, but thereafter, look at the pullback which has played out in the markets from 12 p.m. onwards. And right now, the Nifty is almost back in the green, while the mid-cap index is up nearly 0.25%. From the day's low, we've managed to recover more than 100 points because the Nifty is now situated and positioned at 17,715. We've also managed to climb above that 20-day moving average. The global backdrop in terms of Asia was fairly subdued, but Europe is not too weak. You've got a cut of about 0.25% on the CAC and the FTSE, so not too bad. And the Dow Futures is currently suggesting an up move higher by about 45 odd points. Banks are doing well, so it's led by Inodus Bank with a 4% rally. We'll talk more about it, but even other names like an Axis Bank has started moving up. You've got strength coming in, and other financials like HDFC Life, Adani Group stocks, of course, are higher in trade. And on the losing side, IT is on the back foot. With the index per se down close to about 1%. But the story is about India's resilience, the pullback, and the fact that after a 400-point rally on Friday and Monday, there was all the reason for you to, see some amount of profit booking considering the global weakness, but that's not played out.
I think phenomenal is the only word that comes to my mind, Reema. It's been absolutely breathtaking, the manner in which the markets fought back and kind of shrugged off a lot of this uncertainty. Though, I don't want to be sort of the negative view seeker over here, but I think it's important to keep context in mind, because what's happened in the US rates market, whether you can really write that off in one day flat, digest it and move on, we don't know. At least I'd want to wait a couple of days to see how the bond market, the rates market in the US behaves, and then therefore the fallout in equities. By the way, just to get some context to this, Reema, the 2-year yield in the US is at 5%. The 10-year is just about the 4% handle. So the differential is 100 basis points. The last time the differential between the two, and we're talking about an inversion in the yield curve, the last time the differential was almost 100 basis points plus was 40 years back.
1981.
Yes, and that's when we all know what happened after that. Many a times these inversions have been an indicator of an upcoming recession. So we've heard the narrative long over. The question is whether this time it's any different. Well, that's a long debate. It will continue through the course of this show and many others. But for the time being, I think it's worth taking in mind, keeping in mind the fact that the recovery has been absolutely nothing short of breathtaking. So, Nigel, hands down, it really goes out to the Bulls the way they've fought back today.
Well, happy Women's Day, ladies. Surbhi, earlier today I said it, right? Lady Luck could shine upon the Bulls, right?
Yes, you did.
It seems that's played out today, because who would have thought, 1 hour to go for today's trading action, and we're trading in the green. Wow, look at the Nifty Bank as well. Big recovery from the low point of the day. Though in Monday's trading session, we did come off the day's high. It seems that the bulls were positioning for some kind of a disappointment on the holy holiday, the trading holiday that we had. And the Nifty came off close to 90 points. The Nifty Bank was down 300 points from the day's top. And so any kind of bad news, some part of that at least got factored in. Remember, volumes today are a little bit lower because parts of India are still, will be shut for Holi. And there are various parts, whether it's North India, sections of South as well, are celebrating Holi today. The options data, though, is encouraging. We've seen a good recovery from the day's low, and 17,600 put as well as the 17,650 put. Both of them are seeing a good amount of open interest build up. So that's telling you that maybe in the near term, the bulls do want to go back to around 200, the DMA. They want to take some bit of support at around the 17,600, which is from where we did bounce off in today's trading session. So the key levels to track, there is writing being seen at around the 17,600 put. So 17,580, that becomes a crucial level to hold out on. And on the upside, yes, we've seen a recovery, but I expect the bears to come in at fight at around the 17,770 odd level. And I say that because there is call writing being seen at around 17,700 calls. So these two levels, let's get both of them up for you on the screen. The support level as well as resistance, both of them crucial markers now in the near term. Back to you all.
Okay, let's tell our viewers then what we've lined up on closing bell today in the next 1 hour. Inodus Bank is gaining in trade as we learn from sources the RBI is likely to extend CEO Sumant Katpalia's term. We also learn from sources that Chola Mandalam Investment may be eyeing management control of Aptos Value Housing. Details on both those exclusives coming up on the show.
Axis Bank seals the deal to acquire Citi's consumer business in India for 11,600 crore rupees. Key excerpts from our conversation with MD CEO Amitabh Chaudhary coming up in just a bit.
Finally, we'll discuss stock portfolio bets with our alpha manager Shibani Sirkar Kurian of Kotak Mahindra AMC. All this and much more in the next 60 minutes.
All right, so let's kick it off with trading strategies for the last hour. Mitesh is with us. Mitesh, hi, good afternoon. Really, who would have thought, right? We had the worst queue stacked up. It seemed like it would be a bear party, but no, the bulls have had it. You tell us, how would you play the last hour?
So, early in the day, the initial view was that the morning dip should be immediately bought into the stop below 17,575. I think that's played out well. And, the overall setup was very positive, despite the fact that we had come off a bit on Monday towards the second half of the session. And today we had a gap down opening. But the rally which started on Friday, I think, had pulled the hourly and the 2 hourly indicators on the positive side. So there was a good chance that, eventually we'll see good follow through over here. And that's what is playing out. So we hit that 61.8% retracement level on Monday, gave a correction. And now I think, we are resuming the up move. I think the retest of 17,800, give and take 10 points here and there, should happen immediately. Maybe if not today, then possibly tomorrow. And once we start getting past the 17,800, 820 zone, then 18,000 and then 18,150 are the targets which I'm looking at. So I'm not really sure whether we have started a bigger uptrend, but at least in the short term, this clearly looks like a market which is positively biased, and trading wise, it should be a market when traders should be looking at exploring and having long positions. So very clearly, I think buy on declines remains the idea. And as we said today, I think morning was one such chance. And in case you get another decline, I think closer to 17,600, 650 is your buying zone with 575 on the spot as the stop loss.
Okay, thank you very much for that. Mitesh, before we let you go, what about the individual stock recommendations for the last 1 hour?
Good afternoon, Rima. In line with my market outlook, I have long positions. India Cements is, giving some kind of a reversal on the upside. So that's a buy with a stop at 199. Look for targets of around 210. And Inodus Bank, I think, was discussed with some news flow happening over there, which is on the positive side. That's technically also given a good breakout. So that's a buy for targets of around 1,200 and a stop below 1150.
Okay, we'll come back to you. Let's talk about Inodus Bank, a stock that you like technically, but fundamentally, here's the news. And this is a CNBC TV18 exclusive. We learned from sources that RBI is likely to extend bank CEO Sumant Katpalia's term by an additional 3 years. Lata's here with those exclusive details. Lata.
Well, that's what banking sources tell us, that people in the Reserve Bank appear to be satisfied with Sumant Katpalia's performance, and therefore the board's recommendation that he be given a 3-year term should be approved. In any case, these sources tell us that Reserve Bank wouldn't want to wouldn't want instability in any bank. So giving 1 year and all that would be uncertainty. And therefore, chances are that they're going with the full 3 year, which the board had recommended in mid-September. Kathfalia's term ends on, the current term ends on March 24th. And therefore, an announcement should be expected shortly. The board had extended way back in mid-September itself.
Okay, all right. Thanks a lot for that, Lata. Clearly, that news has excited the stock, trading with good gains today. Market expert Prakash Divan joins us on the show. Hi, Prakash. What do you make of this one? Inodus Bank, it's doing quite well. The big boss gets an extension. Always good news. Your take?
Good afternoon, Nigel. So, yeah, I think it's a very clear validation of more than just the continuation of the top management here. It's according to RBI, if that were to be given, it also indicates that things are fair and healthy at the bank. Because conversely, we've seen that in some of the cases where the extensions were denied, and there were lots of other areas which were found to be lacking. So that is something which is more of a proxy, this thing from indication from RBI side that this could kind of probably mean that the bank would go ahead and continue to grow. And the other trigger that's been, not the trigger, but I think the build-up that's been happening, tailwinds to Inodus is, promoters have been talking about infusing more capital, making this balance sheet much stronger. And, the kind of growth that they see in the business is probably taking it to the next level where it can be fairly competitive with the other larger private sector banks. Today, it's a very good second-rung private sector bank. But if it has to kind of catapult itself into that, and there's a lot of space that's getting vacated with the merger of Citi and Axis and, things like that. So there's lots that's positive for the bank. And I think this was just an added catalyst of sorts. But yeah, I mean, if you like banking as a sector and if you don't have exposure to some of these banks, it kind of does offer that opportunity. But then we keep on talking about how promising some of the PSU banks are, which is a different story, of course. But I'm just saying, Inodus has its own salience, which probably is reflected in the screen today.
Okay, got that. Thanks for that call on Inodus, Prakash. Stay on. Actually, it's a day of a lot of exclusives today. Here's another one coming up. Sources are telling us that Chola may take over Aptos Value Housing, and that's because the current promoters perhaps don't really have a succession plan in mind. Abhishek is here with the details. Abhishek, what have you picked up?
Surbi, sources tell CNBC-TV18 that Chola may eye an arrangement offering management control of Aptos Value Housing. Now, Aptos promoter and MD Mr. Anandan has not been able to identify a successor in the family. So, Anandan is an ex-employee of Chola and is likely to favor such a deal. The integration or the processes of both the entities are almost similar. So, it augurs well for a merger going ahead. So, P promoters who own around about 37% in Aptos may have an exit point at some point of time. So Chola seems to be keen on entering the housing segment, and Aptos actually makes a good fit. Just to run the viewers through some of the numbers, for Aptos, the gross NP ratio is at just 1.44%. This compares to about 5.4% that you have for Chola. Aptos has a very strong return ratios profile. The ROA is at 8.5%, ROE is at 16%, and it's one of the best in the industry. Also, the fact that they are very robustly capitalized at 79.3% capital risk weight asset to advances. So, capital ratio is at 79.3%. We did reach out to Chola Mandalam, who said that as a policy, Chola does not comment on market speculation. We also tried reaching out to Aptos via email and WhatsApp, but we are still awaiting a response from them.
Okay, got that. Thanks, Abhishek, for the details there. Prakash, just wonder if you've had a look at the story. Any thoughts on Chola? Or, I mean, Aptos, though Aptos is the asset in question, which may move to Chola in this case?
Yeah, so, pretty difficult to surmise at this point in time without, much specifics on the valuation and, what kind of structure that would entail. But, it does make a lot of strategic sense for Chola. They have a very strong balance sheet, which probably at some point in time, there's always a lid to its growth, given the restriction in terms of the segments that it caters to. So, Aptos brings in a huge potential area of growth for them. And there is a cultural match of sorts, given the fact that the promoter of Aptos has been part of the Chola DNA as well. So, in that sense, it's a good fit. Chola can probably scale up, and because that they would need to seek some sort of a growth trajectory, which is otherwise, from the existing businesses would probably get a bit restrictive. There's no utilization of a very strong balance sheet if you can't deploy it in a decent ROA kind of profile. So it makes sense. So let's wait for that. Chola has always been a good premium NBFC, so there's no question on that they would do any wrong capital allocation. But barring that, I'm sure this will work out to be a win-win for both the players.
Okay, a win-win for both the names involved and both the parties involved. Prakash, afternoon. Wanted to get your thoughts in on Bajaj Finance, top Nifty loser today. There is a report coming out of Ambit where they believe that, given where the valuations of Bajaj Finance are, forward valuations, it requires the company to grow its AUM by 25% over the next 10 years. And according to Ambit, no lender has managed to achieve this feat, a 25% every year CAGR growth over the next 10 years. And that's the ask that Bajaj Finance's valuations demand. What have you made of this argument that Ambit has put forth? And does it then cap the valuations of Bajaj Finance and make you a bit cautious?
Good afternoon, Rima. So, this has not come as a surprise to anybody who's been following Bajaj Finance on the valuation part particularly. I think we need to accept the fact that Bajaj Finance was, there were reasons for it to be numero uno in that space. They pioneered that space. They kind of, created that kind of a market with the kind of markers and metrics that only they've managed to clock. And because of that, they were always given accorded a premium multiple, which was extremely, extremely rewarding. Now, the scarcity premium which it used to enjoy, given the fact that there are many more people who have come into the market, there are a lot of banks that are morphing into similar verticals or models as sub-verticals. It's bound to kind of impair their growth rates. They don't have a market. I mean, we know about this joke that goes around that whether your friends or family miss you or not, Bajaj Finance always does and keeps on calling you up. They've been so aggressive in reaching out to all segments of their PG that probably it's going to get more difficult. And I think the Ambit report probably anticipates that. But you know what? There are other triggers other than just lending that they could have. So if the AUM growth from the lending business doesn't grow, they could probably do very well on the mutual fund side. I mean, there are multiple things that could work for them. And it's a company that transforms itself in a very agile way. I wouldn't write it off in terms of what kind of growth rates it could clock. But yes, the valuation is certainly premium. So at lower valuation, it would probably start making sense. So 6,000 whereabouts probably seems expensive. Maybe you could buy it at 5,000. If on a good day you get those kind of levels. But it's difficult to kind of talk about 10 years not happening the way you want or the way you think it will happen the way you want. So either ways, it could be argued. But I think I would definitely believe that the valuations could probably temper a bit, and then that's probably where Bajaj Finance has always made sense and people have made money.
Okay, all right, Prakash, got that. Request you to hang on with us, Prakash. For the time being, we'll slip into a short break, but we'll be joined on the other side by our Alpha Manager of the Day, Shibani Sirkar Kurian of Kotak Mahindra AMC, will be joining us. Stay with us.
Welcome back. Just around the flat line on the market. So let's keep it with the string of exclusives that we've got for you. And here's another one. This is a story that's coming in from Pavitra. We're learning from sources that Axis Mutual Fund is perhaps all set to get a new CEO soon. Pavitra with the details. Pavitra, is this in connection with the fallout of the SEBI stipulation with respect to front running? Is it at all linked to that, perhaps?
I mean, we don't know it's coming 1 week after the SEBI interim order did come out on, front-running allegations against Axis's earlier chief dealer Viresh Joshi as well as 20 others. So it is coming in that backdrop. But what we are learning now is that Axis Mutual Fund is going to get a new CEO and that Neeraj Gambhir's name is doing the rounds for this position. So, I mean, just to bring you up to speed with a little bit on what Neeraj Gambhir has been doing. Currently, he is the head of Group Treasuries as well as Markets and Wholesale Banking Products at Axis Bank. So he's not in the mutual funds business, but he has been in the financial services space for a very long time, for over 25 years. He was managing director and head of fixed income at Nomura Holdings before he was at Axis. He's been at Axis Bank as well for almost 3 years at this point. Before Nomura, he was managing director of Lehman Brothers India, and before that, he was senior general manager and global head of structured finance and balance sheet management at ICICI Bank. So someone with 25 years of experience, but he's not from the mutual fund industry per se. I do want to point out that I did try to get in touch with Axis Bank, with Axis Mutual Fund, with Mr. Neeraj Gambhir as well. They've not written into or responded to our query yet, but this is what we're picking up from our sources, that Axis Mutual Fund is likely to get a new CEO very soon, and that it is likely to be Neeraj Gambhir.
So a new CIO, a new CEO, it's a complete facelift coming in for Axis Mutual Fund. Prakash, you want to comment on the big changes, sweeping changes that we are seeing, likely to see?
Yeah, absolutely. I think it's definitely a welcome move by the asset management company to make sure that they get some fresh skill set and names here, and they're very respected names. I mean, I know of Neeraj Gambhir being a veteran in the banking side, on the treasury side, and I've heard him on his views on fixed income and markets quite well. So it's definitely good to have somebody with a fresh outlook and not have a baggage kind of a thing, move over from one mutual fund to another. So I think it's a great move. But as Pavitra said, it's still yet to be confirmed. But once it does, we'll definitely get some more detailed look on it. But definitely looks like a positive.
Okay, all right, Prakash, got that. Well, let's focus on another space that's quite sweet today. Sugar stocks, they're buzzing in trade. Manisha is standing by to give us all of those details. Manisha.
Well, thank you so much for that. It has been a great day for sugar as an industry, and various factors really which have been supportive as well. Starting with the global markets, where you are looking at the sugar prices now trading above 21, which is a very close to a 6-year highs. And then there has been a report from International Sugar Organization suggesting that the earlier global surplus that they put at around 6.2 million tons now stands at 4.2 million tons. So there's not as much surplus in the international markets as well. And for India, a big boost came in via sources which suggest that additional 1 million ton of sugar export could be allowed, but this review would really come in by the end of April, and only if the sugar output reaches 33.6 million tons. As of now, until the latest report, by the end of Feb, we do understand that the crop output is at 25.7 million tons. Total export numbers, if you look at that as well, has been at 4.3 million tons, while the overall 6 million tons has been contracted already. Also, 2.85 million ton of sugar is diverted for ethanol, which is, by the way, 30% higher than as compared to the last year. And then remember, sugar also has been taking support from the fact that the summers arrived slightly early. We've just done Holi, and we are into Holi in various states right now, and Ramadan festival is not too far away. So the on-ground physical sugar demand also is something that seems to be supportive. So the underlying commodity and the sugar stocks all in the green today.
Okay, all right. Thanks a lot for that, Manisha. Well, Prakash, how do you approach this space? Anything you like from the sugar space?
Oh, absolutely. We've spoken about this about a couple of months back when we were talking about cycles, and this is something where very evidently there was an indication that the cycle was restarting. The favorable cycle was restarting for sugar, given all the three vectors working towards it. Sugar prices internationally, sugar prices at the farm gate, to this thing, the markups that they've received, and of course the ethanol story that's building up so well in India. So I think all of that is something where, and then remember, this time around, this growth, Nigel, comes with a backdrop where sugar companies are not leveraged. The balance sheets are far more leaner. There's not much of working capital that's locked in. So your interest costs, the finance costs are far, far lower. So there's going to be a very clear push through on the bottom line. And that is something which the stocks probably haven't yet captured. So I think some of the good names can give you a 20-25% upside in the next few quarters itself, 3-4 quarters, maybe not more. And I would stick to the big ones, the Dwarkesh and the Balrampurs and the Dampurs of the world.
All right, Prakash, got that. So we will let you go on that sweet note, and we look forward to our next conversation. Thanks very much. Well, the market's holding up nice and steady. There's no problem whatsoever. It is flat. Don't go by what the actual index value is telling you. It's that graph that tells you the story of resilience today. Big fight back from the lows. Let's get our next conversation going. We have Shibani Sarkar Kurian, Senior Executive Vice President and Head of Equity Research at Kotak Mahindra AMC, on this leg of the show. Shibani, great to have you on the show as always. So you tell us, I mean, let me actually get your reaction to today's moves. I know we don't talk day-to-day markets with you, but it's been quite a talking point, right? On a day when you had so much negative news coming in on interest rates, what the US Fed chair said, etc. This resilience that we've seen today, do you expect this to last?
Yeah, hi, good afternoon. It's always a pleasure to be here. So when you look at our markets, clearly what we have seen so far in this calendar year to date has been a lot of volatility. Markets which were outperforming significantly last year have underperformed year to date. And with this underperformance, what we have seen is that the valuations which our markets were trading at have now gone back to long-term averages. So on an absolute basis, we are back to long-term averages. And even our relative premium to the emerging market has now gone back closer to the long-term average level. So valuations clearly have corrected. However, despite the correction in valuations, what we have been seeing from the global space is a lot of uncertainty regarding interest rates, inflation, and growth. And our belief is that this uncertainty will last for some time. And hence, while we may not see an absolute big downside in the market, given that valuations are at long-term averages, we will possibly continue to see volatility. Also, what we have seen, in post the quarterly results which concluded, is that there has been wide dispersion between stocks and sectors in terms of earnings. And it's only a few stocks or few sectors which are clearly driving earnings momentum for the market. And that is something that we need to watch out for, especially where FY24 earnings are concerned, given that today consensus is still building in mid-teens earnings growth for FY24. So from our perspective, we are looking at companies where there is visibility on earnings, valuations are on your side. And in that respect, the domestic facing sectors are looking better placed where there is visibility on growth and where valuations are also on your side. So sectors such as financials, autos, and industrials continue to be our top picks.
At what point do you think this outperformance of banks or the kind of positive surprises the banks have been generating in terms of an EPS growth? For the last 2 quarters, the financials have been positively surprising and there have been earnings upgrades. But the fear is that's going to come to an end very soon. When do you think that will happen?
So at this point in time, we do believe that the earnings momentum cycle for the financial space, especially the large banks, should remain largely intact. While we possibly will see some peaking out in terms of net interest margins over the next few quarters. However, there are levers that are available for banks in order to maintain their earnings profile and their return ratios. So for instance, operating expenses could be one area where banks which have spent significantly in building up franchise in terms of distribution over the last few years, you could see some moderation and that can help offset any pressure that is there in terms of net interest margins. So at this point in time, we do believe that for the banking sector as a whole, the kind of improvement that you have seen in terms of return ratios in the last year, year and a half is not reflecting in terms of valuations. So while the ROEs and the ROAs of the sector have moved up quite sharply, valuations are actually now slightly below long-term averages. And while, of course, interest rates are likely to stay up for a period of time, and therefore you will see increase in cost of deposits, large banks which have a strong liability franchise, which have higher CASA, seem to be fairly well placed. And given that we do expect the overall earnings momentum to remain fairly intact, valuations do seem to be favorable for the sector, especially for the large banks. And that's where we are positive.
All right. Hi, Shibani. Good afternoon. And, before we talk about the markets, wanted to wish you a happy Women's Day as well. Over the last 10 years or so, I've met you at conferences, at airports, you've joined us on shows as well. And it's phenomenal the way, all of you, manage the personal as well as the professional life. So enjoy your day and wishing you a very, very happy Women's Day as well, Shibani. But, you were just talking about the market, so let's get back to that. What about, contra investment strategy? Pharma, no one's really talking about that. A few of those pharma names, smaller names, whether it's an FTC, you look at a Newlin Laboratories, maybe an Ajanta Pharma, they're doing well today. Any view on the pharma space, or do you think there's still a lot of pain, a lot of price erosion still has to take place before one can look at it?
Thanks, Nigel, and happy Women's Day to all your viewers as well. And yeah, it's always a pleasure running into you at airports and at conferences as well, and apart from being on the show. So coming to your question on pharma, the way we have approached pharma as a sector has always been very, very stock specific. This is a sector where it's difficult to take a homogeneous call per se. And of course, this sector has seen significant headwinds in the last few years. Now, at the margin, what we believe is if you divide the pharma space into three parts, which is the US business, the Indian domestic formulation space, as well as the hospitals healthcare franchise, the US business is, the kind of price erosion that we were seeing has started to moderate. However, there is a lot of uncertainty where regulatory actions are concerned. And therefore, we will have to be very, very, very circumspect in terms of the kind of stocks that we pick in this space. Now, coming to the domestic formulations business, this is a space where growth has been steady and double-digit growth. The India business recovery has been fairly sharp, especially post-COVID, and things have seemingly gone back to a normalized run rate. So that is a space where we do have exposure, especially on the Indian business perspective. And the third is the hospitals healthcare franchise, where again, post-COVID, we've started seeing normalization. Of course, valuations have run up in this space. But overall, from a slightly longer term perspective, the hospital space is something that we are also positive on. But typically, our approach to pharma has been extremely stock specific in nature, looking at companies in terms of their approval pipeline. But of course, as you rightly pointed out, valuations do appear reasonable at a headline level.
Okay, Shivani, so before we let you go to enjoy what would be hopefully a great evening, give us some more thoughts. You did sort of outline a couple of the sectors that you currently like. In terms of the big themes to watch out for in the next 2 to 3 months or perhaps longer, what specific investment strategies, themes or areas would you look at?
Yeah, so some of the themes that we are really looking at, one, we do believe that the entire financial services space is a space to watch out for over a slightly medium to long-term perspective. This is a space where incrementally growth, especially across financial services products, should stay fairly positive, and especially where large banks are concerned, the kind of market share shifts that you've seen in terms of loans and deposits, and some of the large private sector banks and large public sector banks, this is something that would likely continue. We do believe that the sector is well poised from a ROE perspective, and therefore, as we were discussing, valuations remain fairly favorable. The second theme that we have been playing across our portfolios for a while has been the entire infrastructure, manufacturing, capital goods theme, and this we believe is fairly intact. What we have seen, the continued spend in terms of public sector capex, especially where roads, railways, and defense is concerned, continues. And this we believe will help in terms of growth remaining fairly strong in this space. The third area where we have been positive on has been the auto space. And again, we have started seeing revival in growth across segments, whether it be passenger vehicles, CVs, and to some extent now maybe nascent signs of two-wheeler recovery. And therefore, that is also a segment that we continue to remain fairly positive on. One area that we are watching out for is what's happening on the rural space. And last time we had this conversation as well, where at the margin, it does appear there is some uptick in terms of rural wages and rural demand seems to be possibly improving. However, there are a lot of moving factors as well to watch out for this space, but this is a segment that we are closely watching out for.
All right, Shivani, good to hear that thought. And on that optimistic note, we'll have to end this conversation. But, I'll tell you what, from morning we've been talking about this lady luck shining for the bulls, and it seems to be playing out. I'm in minority right now, but the markets, we have moved to the high point of the day at around 3 p.m. Who would have thought? The Nifty up 35 points, the Nifty Bank at the high point of the day, and the advanced decline ratio firmly in favor of the number of stocks advancing. So it's a good 3 p.m. move that we have right now.
Nigel,
ladies, take all the credit.
Nigel? So therefore, it's confirmed, luck indeed is a lady, right? It is lady luck.
Absolutely. All right. Well, on that note, though, we'll slip into a short break. You come back. Nimesh should be waiting by on the other side. He'll give you some support, and he'll tell us what's going on in dealing rooms in our special segment, the Street Chat. We'll also get our technical experts back with us. Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the markets are at the high point of the day, and it's a good time to get Nimesh with us. Nimesh, what are you making of today's market action? The bulls would feel very, very good. You got up this morning, you said, oops, SGX Nifty down 100 points. If you're going to end 40 points higher, wow, the bulls will feel good.
I think it's a good day for the markets, given that there was so much of bad global cues and still we are up and almost at day's high. And the good part is the breadth is positive, And now we are seeing a lot of new sectors are participating on the upside. So today, for instance, sugar is doing good. All the sugar stocks are buzzing. Auto stocks have done well in trade today, and so is the PSE stocks. The PSE stocks has some bit of momentum, but that seems to be carrying on even in today's trade. The flows are mixed, but today the data will be impacted by two large block deals, which is the Jerome Finance and the Kirloskar Oil, because in both the trades, the non-institutions were on the sell side. So the number will get reflected on the buy side. That's something we need to account for in today's FI data. Even the financials are doing good today, and the good part is there is a bit of momentum back in the PSU bank stocks. They're well bid as well, is what I understand in terms of flow. So good day. The flows are mixed, but there is momentum, and the best part is the breadth has improved, and a lot of other sectors have started participating on the upside now.
Oh, that's good news then, Nimesh. We'll have to keep an eye out on those two block trades when we're looking at the institutional flows. Very important. What about individual stocks? What are you picking up?
So in terms of individual names, the first stock on my list today is Som Distilleries. Good volumes on that stock today. The stock last when I checked was up 10% and overall there is a bit of flow activity at the HNI desk. But I believe the capacity expansion is on track, and that's been the key trigger for the stock to do well today. So that's the first one. The second stock is Ambuja Cements. This is going to be a bit tricky. There is a lot of chatter about a large block deal coming in Ambuja Cements very soon. I've tried to check with the management as well. I've tried to check with some institutional desk as well. No such indications, but the buzz is very strong, or an anticipation is very strong of a large block in Ambuja Cements very soon. So that's something to try going forward. And the last stock is L&T. That stock is buzzing in trade. Good volumes at HNI desk. Some bit of accumulation is back from the larger FIs is what I understand. Also, there is a Morgan Stanley note today morning. They've upgraded the stock price. They've raised the target price on L&T, and also they've put out a tactical buy report. So that's the reason why L&T is buzzing in trade today.
Nimesh, thank you very much for that. Morgan Stanley has raised the target price on Larsen & Toubro to 2,827. So that's a near 700 rupee upside from current market levels. And they believe L&T is the monopoly play at scale for India's capex, whether it's from the government or from the private sector. But let's get back to Mitesh Thakkar, who will tell us what you can buy today to sell tomorrow. Some BTST trading calls coming through. Mitesh, pretty phenomenal, right? The kind of up move that we've seen in the last 10 minutes, and expiry is tomorrow. What have you made of the last 10-minute up move and the stocks that you would recommend?
So my belief is that I think the bias is still on the positive side, and I think this was I was expecting maybe this will happen tomorrow. I think the buying remains very strong. Overall, I think 17,800 I think is the next pivot level. So idea is that as you get closer to it, take some profit stop. I think around 25%, maybe 1/3, 33%. But hold on to the balanced position. I would want to see eventually the market get past 17,800, which will be a trigger for further upside, because there are about 3 levels to watch out over here. 1, there's a gap which happened last week Wednesday. 2, this is the 61.8% retracement level of the fall from 18,134 to low of 17,255. And 3, there are a couple of moving averages over here. So I think let it get past 17,800, 820, and then again add on to your long positions. Otherwise, you might get maybe a day or two volatility to re-enter again at lower levels. So not booking aggressively, but going mildly, taking some profits off the table, maybe 1/3, 1/4 is what I recommend. On the stock side, Titagarh Wagons is having a breakout. That's a buy with a stop at about 234. Look for a target of roughly around 270 here. And ITC is something, which can be taken as a BTST call with a stop below 390 for targets of 396.
So phenomenal move, Mitesh. Thanks very much for that. And yeah, your long calls have worked out beautifully today. So congratulations to you. This is a phenomenal move in the market right now. Just take a look at what's going on. I mean, we are actually from the lows, we're talking about a 150-point up move in the market. And this last surge is absolutely stunning. A lot of it is actually coming in from banks. Look at that. Yeah, that's almost a 1% recovery from the lows if you track it. Let's pull up some intradays. Axis Bank, for instance, which was sulking till a while back, that's decided to move higher. That's the Nifty Bank for you. SBI is moving higher. So this last leg, this big thrust is literally coming in from a lot of these banking stocks. ICICI Bank is now piling on more gains. Very, very big moves coming in as we're getting set to wind down the day. Mayuresh Joshi is with us now to wrap things up. Mayuresh, great to have you on the show as always. This has been quite a bulls party today, right? They've completely decimated the bears when perhaps the bears thought they had the upper hand. Let me ask you about the banks. There's a lot of news flow, of course, including the story that we had on Indus Inc. If you are looking to buy one of the main blue chip large cap names afresh, which bank stock would you back?
Afternoon, Surbi. First of all, I think wishing you, Rima, Sonia, the entire team, Pavitra at CNBC-TV18 a very happy Women's Day, and to all the viewers of CNBC-TV18 as well.
Thank you.
When it comes specifically to banks, what has probably transpired in the last few quarters has been stellar numbers that have come through. Even in the past quarter, when you're probably looking at how the numbers have stacked up, both in terms of advances growth, deposits growth, the NIMs have been very, very stable till this point of time. And the expectations in terms of asset quality pressures have come up significantly, whether it's for private as well as the public banks. To come to your questions on the larger names, obviously, I think HDFC Bank is coming very, very close to its pivot at this point of time as we speak. There has been price damage to a certain extent in stocks like a State Bank or an ICICI Bank from the larger names. But HDFC Bank supposedly has the relative strength still maintained with that. All the key features and dynamics that we were just speaking about, the bank has probably managed to maintain that. The merger, yes, I think that is a big overhang at this point of time with the merged entity names coming down to a certain extent. But overall, I think the franchise remains extremely strong. So I think on the buy watch list from the larger names, HDFC Bank, ICICI Bank do feature in. Within the mid caps, the stock that probably stands out is Federal Bank. A strong set of numbers, expectations of mid-teen loan growth going forward. The restructured book at 1.75 expected to come down. Credit costs are expected to come down significantly as we speak, and NIMs expected to get maintained around that 3.3% mark, with GNPs, net NPs expected to come down significantly. GNPs at 2.4 expected to come down below that 2% mark as well. So I think a few banks that we have on our buy watch list.
All right, Mayuresh, hi. Mayuresh, I wanted to ask you about some of these steel tube makers. You know, earlier today we had this company, GTL Industries, it used to be known as GTL Infra, and they've done quite well. I'm just looking at a chart, you know, whether earlier everyone used to only talk about APL Apollo, which is in a league of its own in terms of size as well as valuations, but a couple of these other names, Rama, you have GTL, they have done pretty well, JTL. Any view on this space? Any stocks you like from the tubes, pipe space?
Afternoon, Nigel. So I think when it comes to the overall methodology in terms of our earnings estimates that we have at only 20-25% earnings CAGR that we probably see on an annualized basis over the last couple of years, along with recent quarterly earnings beat to that extent as well. I think APL Apollo probably still stands out to be one of the better players. Yes, I think the compounded rate at which APL Apollo has grown over the last few quarters has been humongous. But if you look at the sequential performance, specifically Q2 to Q3, you've seen a significant improvement happen in terms of the EBITDA per ton that they have reported. The kind of value additions as a percentage of their overall product stroke value mix is around 54%, expected to go even higher. Being commodity consumers and closely linked to both how the steel consumption and the cycle probably moves in, I think the input cost should start going down as commodity costs have come off quite significantly. So to that extent, the volume growth that is expected in the next few quarters should be reasonable enough, which should give significant amount of operating leverage onto its balance sheet as well. The kind of sizes that the APL Apollo also makes at this point of time makes it very, very competitive to a lot of other players, whether large or mid caps within the domestic and the export markets as well. Just a point forward, Nigel, even a stock like Ratnamani Metals as an example, both the CS and the SS segments, carbon steel and stainless steel segment, have been doing exceptionally well. The export orders have held up. The domestic orders expected to remain extremely steady at this point of time. And therefore, if you look at the performance that these guys have delivered over a longer period of time, the expectation is that even a stable performance going forward should probably ensure that the stock outperformance probably continues. It trades above the key pivot levels on O'Neill. I think a couple of these stocks might continue doing well. APL Apollo.
Mayuresh, to stay on, we want to talk a bit about the insurance space. So life insurance data for the month of February is out. Yash is joining in with the details. Yash.
Well, Rima, overall the numbers for the industry have been weak as far as the month of February is concerned. So the total premium for the industry is down 17%. Up to February, it's up 25%. Now, if you look at the numbers for the private life insurance space, the February premium has grown by 10%. Up to February, it's up 17%. And February retail APE has also grown by 18%. In the month of February, I said the numbers have been weak, but HDFC Life has been one exception as far as the weak numbers are concerned. The February premium for HDFC Life have grown by 9%. Up to February, the growth has been 7%. And the strongest part has been the annualized premium equivalent, which has grown by 38% in the month of February for HDFC Life. LIC, the numbers have been weak, down 32% in the month of February. Up to February, the numbers have been up 30%, but that has been largely because of the growth in the first few months of the year. The retail AP is also down by about 3%. For ICICI Prudential, the premium in the month of February is down 1%. Up to February, the premium has grown by 9% and retail AP is up 7%. Max Life, the premium has grown by about 4% in the month of February. Up to February, the growth has been 7%. Retail AP has also grown by 6%. SBI Life, the premium in the month of February has grown by 7%. Up to February, the growth has been 15%. And finally, retail AP, that has seen a downtick of about 0.2%. So the strongest as far as the month is concerned goes to HDFC Life. Other players, the growth has been quite muted in this month.
Okay, thank you very much for that. Naresh, any thoughts on insurance? Overall, while there is some growth compared to last year, on a month-on-month basis, there is a bit of decline that you are seeing. Any thoughts on these numbers and what explains the numbers?
Oh, yes, I think what Yash was maintaining at this point of time, I think you should see a steady flow probably come through Rima in the month of March at least, because a lot of tax saving schemes and a lot of money probably gets diverted in terms of probably saving your tax to under the ATC benefits. Now, with the new tax rules that have probably kicked in, we've heard managements of HDFC Life as an example, where their product mix is a little bit higher skewed in terms of these products itself, which would have a hit in terms of both the top line growth as well as bottom line growth as well. For the companies as a whole, I think the underperformance probably continues. If you probably see the annualized premium equivalent, as Yash was mentioning, has been on a downward trajectory over the last few quarters. The second aspect in terms of how their solvency ratios have stood out, I think solvency ratios have all been fine. When you talk about the embedded value for the core business itself and the return on embedded value itself has been pretty steady as well. SBI Life, it will probably stack up within the existing players, HDFC Life, Max, ICICI Group. The product mix is relatively better compared to the rest of the pack at this point of time. If you look at the overall OPEX ratio, including commissions, it comes to around 7%, which probably is the best among the life insurance players at this point of time. And HDFC Life, ICICI Group have somewhere around 20-21% in terms of their annualized expenses, including the commission costs that probably come through. The bank assurance tie-up with SBI as its anchor holding probably also ensures that the product mix and the distribution mix is appropriately laid out. So I think stacking up SBI Life relatively better place. But generally, I think all these insurance players are on relative strength and EPS ratings that we have at O'Neill or have a very poor rating at this point of time, more or less in terms of the delivery of numbers they have not been able to post over the past few quarters. So I think our underweight rating on the entire sector probably continues at this point.
Okay, got that, Naresh. Thanks for the call over there. We'll take a very quick break. We'll come back with a little more on the markets and then start counting down to the close. Okay, welcome back. As we're setting down to the close, look at the move on Inodus Bank, 5%. It's been quite a scorcher today. Naresh, as we're winding up, just a specific call on this one and whether you see this enthusiasm lasting. This obviously is in reaction to the story that Lata put out on the possibility of Mr. Katpalia continuing.
Oh, absolutely. I think the extension of the CEO will become a big trigger as and if when it happens. But the two important aspects in terms of their core growth itself, loan growth still expected to be around 18-20% for the next financial year. The NIMs expected to get maintained around the current levels, maybe a tad bit here and there, so between 4.15 to 4.25 or. The restructured book stands around 1.25%, GNP is at 2.04, net NP is at 0.62, expected to come even lower because credit costs are expected to come down. Vehicular finance accounts for 26% but the bank is making constructive steps in terms of building their liability franchise when it specifically comes to home loan, other unsecured loans as well. So I think the core dynamics holding out. Extension will obviously act as a trigger point for the stock. The key PSRS rating holds very, very strongly for ICICI Bank. I think the key pivot levels at O'Neill is somewhere around 1250 odds. If it crosses that, I think the momentum will very well continue.
Okay, 3 minutes left. Mayuresh, thank you very much for joining in. Just counting down to the close, and what a day it's been. It started off on the back foot. By the end of it, it was right on top. The Nifty is ending above that 17,750 mark, a gain of 45 points. But compared to the low of the day, which was 17,600, we are looking at a 150-point recovery. A bulk of the recovery, the last surge, came in the 30 minutes. Banks led the way forward. The Nifty Bank outperforms. The index was up 0.5% more than that. The advanced decline ratio steadily in favor of the gaining side, and the mid-cap index also up nearly 180 points, 0.6% higher. Inodus Bank is the top earners today, 5%. The street likes the continuity of the top management at Inodus Bank. Adani Group stocks as the promoters release some more pledged shares. So Adani Ports, Adani Enterprises rising. Bajaj Auto up 2.5% as JP Morgan sets a target price of 4,400. L&T after Morgan Stanley is bullish on the stock, gains 1.5%, and a couple of the other movers include M&M, ITC, Tata Consumer, NTPC. On the losing side, Bajaj Finance after Ambit initiates coverage with a sell call, sulks with a cut of 2.2%, the top loser on the Nifty, and other drags include the IT space, Tech Mahindra, Infosys, couple of pharma names ending down nearly 1%, Apollo Hospital, Sun Pharma, and Hindalco down 1.5%.
Okay, and it's only befitting that this day sort of ends with sugar stocks doing extremely well to leave a sweet taste in the mouth, right? So you've got all kinds of names, from a Mavana Sugar to Sri Renuka to even so many others. KCP, smaller names, of course, the bigger ones like Bajaj Hindustan, up and about, gains between 5%, 10, 15%, depending on which stock you are looking at. In terms of the other movers and shakers, should also remember the Adani group of stocks because of the pledges being released. It worked very well for the entire group of companies today. Total Gas, Transmission, Green, 5% on most of them, up and about. Adani Power as well, about 5% higher. Adani Ports itself, of course, up was about 3%. IGL is looking at some moves around smart metering. That stock was up and about. Z had a little bit of positive news around that, so it was up. And then you had smaller stocks like Krishna Diagnostics, Vardhaman Specialty Steel, all news-driven, but very good moves, 8 to 9% on several of them. So big day for the mid-cap market as well. The only sort of clear losing trend that one can spot is perhaps some of the new age companies. So PB Fintech, Nykaa, Delivery, these are some of the stocks that have ended on the quieter side. But in any case, look at the mid-cap index itself, a 0.5% gain, towering over the Nifty as well. Bank Nifty is the one that really steals the thunder. Big move towards the last 15-20 minutes of trade and a gain of well over 0.5%, taking the Nifty very comfortably above the 20 DMA. There goes the bell. Well, Rima, what can we say? The bulls have prevailed, and how?
It's up for the third day in a row, right? The rally started with the Nifty at 17,500 on Friday, and now it's ending at 17,750. Tomorrow is going to be the weekly expiry, so we're going to be tracking that very closely. From here on, the levels to track, one will be the 50-day moving average, 17,850, and after that, 17,880. That marks the 38.2% retracement of the correction from our all-time high levels of 18,800 plus to last week's low of 18,255. So this 17,850, 17,880 is an important, crucial resistance for our markets to conquer. It's a wrap, and closing bell on that note. Don't go anywhere. Our special offering, Inside Out, comes up next.